Hey everyone, welcome back to our channel Trading Critique. Today's a monumental day for the Bitcoin fam. It's finally here, the freaking fourth Bitcoin halving. Now, for some of you Bitcoinogs, this might be old news, but for the newbies just joining the ride, buckle up, because we're about to break down what just happened and why it's a bigger deal than finding a Satoshi under your couch. So, what exactly is this halving everyone's talking about? Imagine Bitcoin as this massive treasure hunt. Alright? Miners are like the tech-savvy prospectors with tricked-out computers solving mind-bending puzzles to unearth new blocks of Bitcoin. Every time they find a block, they score a reward in Bitcoin. But here's the twist. This reward gets chopped in half, halved I tell ya, every 210,000 blocks, which is roughly every 4 years. That's what we're celebrating today, the fourth Bitcoin halving. Basically, miners are getting half as many Bitcoins for their hard work as before. Why should I care? What does this mean for Bitcoin's future? Alright, let's think of it this way. There's a limited amount of gold on Earth, right? Miners are slowly chipping away at it. Bitcoin's kinda similar. There will only ever be 21 million Bitcoins created, ever. This halving just slashed the rate at which new Bitcoins are released into the wild by 50%. So, miners are getting half the loot for their work. Now, some folks, the real sharp minds in this space, believe this scarcity could jack up the price of Bitcoin in the long run. It's like a classic supply and demand situation. If the supply shrinks, while the demand stays the same or even goes up, the price could soar. But hey, let's be real. Bitcoin is a wild roller coaster, and there are a ton of factors that affect its price. Past halvings aren't a guarantee for future results, you feel? Enough with the treasure hunt talk. What about the miners? These miners are the backbone of the whole Bitcoin network. They secure the whole thing by checking transactions and adding new blocks to this giant digital ledger called the blockchain. So, with this halving cutting their Bitcoin rewards, how will they keep the lights on? Well, a couple of things could happen. First, the difficulty of mining new blocks might adjust to make it profitable for miners again. Second, the price of Bitcoin could shoot up enough to make up for the smaller rewards. But there's also a chance that some miners might call it quits if things get too tough. Hold on, there's more to this story. You bet. This halving brought something entirely new to the party, the Runes protocol. It's basically a way to mint special tokens directly on the Bitcoin network itself. People are using this protocol to etch tiny bits of data, called Satoshis, onto the special halving block. Think of it like buying a signed baseball card from Babe Ruth himself, but for the digital age. Basically, they're paying a hefty fee to own a piece of Bitcoin history. Pretty cool, huh? So, what's next for Bitcoin? The future's a mystery, but it's an exciting one. This halving is a big deal for Bitcoin's history. It reinforces the whole scarcity thing and highlights how important miners are for keeping the network safe. The short-term price action might be a guessing game, but this halving has the potential to shape Bitcoin's future in a seriously positive way. What should you do with all this information? This ain't financial advice, but do your homework before you jump into any investments. Bitcoin's a fascinating technology, but it's also risky. Invest what you can afford to lose, and most importantly, stay curious. The world of crypto is constantly evolving, and this halving is just another chapter in the Bitcoin story. If you enjoyed this video, smash that like button and subscribe to Trading Critique. Thanks for joining me on this ride, and let's see what the future holds for this digital gold.